All right, well, we're a couple of minutes past the hour. I'm sure a few more people will join a little bit late, but I think we can make a start. So thank you so much to all of you for joining us. My name is Shari Parvarandeh. I'm an associate partner here at Innosight, based in London. I'm joined by my colleague Kristen Colella, who is a partner based in Boston, and she also co-leads our consumer practice globally. We're excited to be here with you today to talk a little bit about how global companies can overcome barriers to scaling innovations across the countries and regions that they operate in. And what we mean by that, I'm sure, will become clearer over the course of the next 40 minutes or so. Kristen, I don't know if you'd like to add any opening remarks.
Thanks, Shari. Just maybe to say this is such a common challenge right now across many of our clients. Many are investing a lot in innovation, or have they created new systems or tools, but we see far too few with the repeatable capability to scale the new, especially if it's on the more transformative side of innovation. So excited to dig into this topic with everyone today.
Good. So Meredith, if we can just advance the page here, I'm just going to run through a very few quick housekeeping notes. So one, the session is being recorded. Follow to the session, we will be circulating a link to the recording as well as the materials that we're using for those of you who would like to access those. We do have a couple of live polls, and we'd love to have participation from you all through those fairly simple voting exercises. We'd also encourage you all to sort of share your own perspectives, experiences on this topic as we go, using the chat function. We will do our absolute best to monitor that and to respond to anything that we might not be able to respond to every comment that is entered there. So I think that's probably all of the housekeeping covered. With that, Kristen, maybe I'll just hand over to you to say a couple of words of introduction about Innosight.
Yeah, happy to. And you can see Innosight's purpose statement here on the screen. Innosight's a consulting firm. We were founded in 2000 by the late Harvard Business School professor Clayton Christensen, who developed the theory of disruptive innovation. And our work is focused on serving clients across industries on challenges related to growth, strategy, innovation, and organizational transformation. So Shari, you and I have been thinking about this a lot, and we've worked together and recently co-authored a piece in Harvard Business Review, how to scale local innovations in big companies. So maybe to start, do you want to share a story that brings this challenge of scaling local innovations in big companies to life?
Yeah, I'd love to. And if Meredith, we could advance the page here. So the story that I'll tell is one of a global retail bank that we served a couple of years ago. And this organization has 3 big regional business units with strategy and innovation decentralized across them. So 3 regions, each one has its own strategy and innovation function. And all of those regions were putting out some really cool, exciting new products into their respective markets. And starting on the left here with Region 1, North America, that region had launched a smartphone app that let its customers withdraw cash from ATM machines using just their smartphones, no bank card required. Region 2 Europe had developed a mobile-only savings product targeted at millennials and other younger consumers in the face of, sort of significant and intensifying competition from fintechs. And then Region 3 had developed a robo-enabled investments advisor targeted again at younger consumer segments. So you've got this really innovative global organization that's developing customer-centric products that were actually really quite on the edge of its own industry. Now, the challenge wasn't that these ideas weren't great or that they weren't innovative. It was that none of them were realizing their full potential because none of them had left their home regions. And the CEO of this organization put it really well when he expressed his frustration to us and said, there's so much new product innovation happening across our global operations, but I have to go and knock heads together to get different regions to actually market each other's new products, even though they offer significant potential across our global footprints. Now, that actually raises questions around this issue about, should strategy, should innovation be centralized or decentralized? And Kristen, maybe I'll hand it to you to say a word or two on that.
Yeah, Shari, it's right. The problem here isn't that decentralizing innovation in big global companies is a bad thing, and that's not what we're saying at all. In fact, there are significant benefits to distributing innovation across the world. Not least that by doing so, companies can innovate more and more successfully by accessing the full breadth and depth of innovation talent, customer insights, and inspiration that can be found in the different corners of the world. But the problem arises when innovations born in one region don't leave that region. And the story of the bank that you're describing here, Shari, isn't unique. This is a common problem we've come across in global organizations across industries. It's one that I see regularly with our clients in the consumer goods space. So what we're saying here is that the opportunity is to empower the regions and the enterprise as a whole to benefit more fully from the geographic reach, which is one of your historical success criteria, which is an advantage for innovation and new products that originate in one part of the business or business models, services, that sort of thing, should be scalable elsewhere. In the consumer goods space, we see different organizational models, more power centrally, more power in the local operating units. We've seen reorgs that swing back and forth. And as many of you may know, much has been written about some of the pitfalls of reorgs. But the real challenge is, how can an organization drive growth for the long term? And consistent with the old adage by A.D. Chandler, structure follows strategy. And in our experience, many organizations have activities that are disconnected from a clear strategy and or lack the rigorous governance pathways or behaviors that support scaling innovation where and when it's needed as part of that long-term growth agenda.
I fully agree, and I think the issue about organizations centralizing and decentralizing continuously is kind of symptomatic of the fact that many haven't figured out how to deal with this problem, and it's really a workaround to sort of identifying and addressing the barriers in a systematic way.
Great. So today, what we want to do is talk about some of the benefits of innovation global scaling and what those are. And we'll talk about 3 common barriers to global scaling of innovation and some solutions to those barriers. So Shari, I'm going to hand it to you to start talking about some of the benefits of innovation global scaling.
Yeah, that's great. And there's several of them. And the value that is left on the table from organizations not scaling things across their global footprints is really significant because there are so many value drivers. Now, the first one that I'll talk about is growth. And it's in some ways the most obvious one. Companies that develop new products in any region and then funnel those new products into their global distribution channels can unlock greater growth from those products than if they just stay within the regions that originated them. And referring back to the bank example that we started with, that bank could offer the robo-investor product that was developed in Asia to its customers around the world. And if it doesn't, then it's missing growth opportunities. The other thing to say about the issue of growth is that doing things at scale, in other words, with the resources of a global organization instead of just a region operating on its own, can actually mean that organizations can develop better products than they otherwise would, because they're bringing to bear the full resources that they have, the capabilities that they have as a global organization, and can develop offerings that are going to be more competitive in the marketplace. And just to bring that to life, using again the bank's robo investment product, that product might be even better if the technology and data assets underlying it were developed and leveraged on a global scale instead of just within a single region. And just to put that in slightly different terms, a region alone might be able to build a good enough product. A global organization might be able to build a world-class one, and a world-class one will grow better than the good enough one. Moving on to the second benefit of lower innovation costs. If regions share innovations across each other, they can actually innovate less to achieve the same growth goals. If you can innovate less, then your innovation costs are also less. Now, regions will also reduce innovation costs further if they avoid duplicating spend on similar innovations. And we see this very, very often. That 2 regions, sometimes even 3 or 4 within a global enterprise, can be spending, and duplicating spend on exactly the same thing without knowing that the others are also pursuing that thing. The third benefit is stronger innovation capabilities. So usually when organizations share innovations, they don't just export, new products and services. They also export innovation capabilities, and those can take the form of, customer insights, of innovation methodologies and best practices. And if they do that, the global organization becomes, stronger at innovation. Its innovation muscles become stronger. And then the final piece, which we call improved investor and corporate growth story, is really interesting, and it's quite a nuanced point, but a very powerful one. If you think about what happens in the absence of global scaling of products and services across a global enterprise, over multiple years, what that means is that regions that started out looking the same will over time look more and more different, because they'll be building different portfolios of products, of supporting capabilities, etc. Now, what that means as regions start to diverge is that the global enterprise as a whole becomes much more difficult to manage and to understand, both by corporate leaders, by C-suite leaders in the corporate center that need to allocate resources across the global portfolio, but also by shareholders who need to understand the sort of growth prospects and the growth narrative behind the organization. That complexity makes it much more complex and difficult to do. Kristen, I don't know if you've got anything to add to those points.
No, well said, Shari. The one thing I would maybe reinforce at the highest level here is that so much of this is about the ability for organizations to navigate disruptive change and be relevant in the future to achieve their overall ambition and vision. And, in the consumer goods space, for example, we see a lot of disruptive change in terms of disintermediation in the value chain, changing consumer tastes and preferences and global demographics shifting. And so in the face of a changing future environment, to be able to find those new sources of growth in line with the financial or other aspirations that an organization has, being able to do some things at scale will just make it easier for the organization to achieve that overall vision and ambition. So with that, let's go to our first poll. Question here for you all is, how effective is your organization at innovation global scaling today? So we have this poll built in, so you can see this here with 5 different options for you. So I'd love to hear from you. Okay, some answers coming in. We've got almost all a pretty good spread of answers across here. We've got most of the answers in somewhat ineffective, 1 response on very ineffective, 3 in neutral. No one really saying we're very effective as an organization at this. 1 person somewhat effective, which is similar to what we see across our clients as well. There's a mixed ability, and folks face different barriers. We're going to talk about some of those today. And please welcome any thoughts in the chat as to what is driving the effectiveness in your organization today. Happy to take any thoughts there. Shari, any thoughts or reactions? Share the results here.
Well, I think we've got a strong skew towards the somewhat ineffective and the very ineffective. 55% of respondents are saying that this is a challenge for their organization, and it just, I think, sort of reflects the comment that you made at the start of the session, Kristen, which is that this is by no means unique to the bank case study that we talked about. It's something that we see actually most global organizations that we serve wrestle with to some degree or another.
Okay, let's see if I can stop sharing that and we'll move to the next section. So what we talked about is there's value at stake, right, from not getting to the most effective global scaling from your innovation work. And the question is, what gets in the way of companies doing this? And the first thing to say is this is a systems problem, which involves a bunch of complex and interdependent barriers that will vary from company to company. We cannot hit all of them, but Shari, let's talk about what we see as three of the most common ones across our work.
Yeah, happy to. The first is what we call fallacies about local uniqueness. Now, fallacies is a very strong word. It is true that regional business units often operate in very distinct market environments. You know, they're local customers, competitive environments, regulatory, technological environments, economic environments, very often vary significantly. So local innovation for local markets is important. Having said that, we often see something that we very affectionately call unique butterfly syndrome. And that happens when local leaders perceive their part of the business to be almost completely unique and not understood at all by the rest of the organization. Now, if you kind of have that belief and mindset that, you know, our region is really unique relative to the rest of the world, then that can be a pretty significant barrier to even considering seriously that there are possibilities to import products and services that originate elsewhere. The second challenge is misaligned incentives and culture. And starting with incentives, regional business leaders are, you know, very rightly measured, incentivized, rewarded to grow their own business units and P&Ls. Now, what that means is that they might actually not particularly want to or have the motivation to spend time and resource exporting innovations that they have generated for the benefit of other regions, because they're not necessarily going to see, you know, the impact from that show up in their own P&Ls, which their incentives are tied to. On the other side of the equation, now thinking about the mindsets of potential importers, sometimes regions can have what we call a sort of not invented here mindset, whereby, you know, they sort of feel compelled to demonstrate their ability to innovate, you know, really independently, autonomously, and without input from other regions. It almost becomes, you know, somewhat competitive across regions, the ability to innovate independently. So the idea here is that there are both formal incentives, but also informal ones, cultural ones at play, that can serve as barriers to global scaling, both on the import side and on the export side. And then the third issue that we'll flag is a lack of transparency. And I alluded to this a little bit earlier, but surprisingly often, regions don't even have enough visibility into one another's innovation pipelines to know that there are opportunities to import things from one another. And if you don't know that something exists, then it's impossible to import it, really. So those are three of the main barriers. And with that, I think, Kristen, I'll hand over to you to take us to our second poll question.
Yes, let's go to the next poll. So these three barriers that Shari just went through, what of these three do you see as the biggest barrier in your organization? Is it the local uniqueness? Is it the misaligned incentives or lack of transparency? Would love to hear from you all on this one. Spread again across all three, but concentrated in the misaligned incentives. So we're excited to dig into each of these. So a couple of you on fallacies of local uniqueness, 5 on misaligned incentives, and about 1/5 of the group on lack of transparency. Thoughts on this, Shari? Is this similar or different than what you expected?
Well, I think it kind of ties to, so there is a spread, and I think it kind of ties to a point that you made, Kristen, which is that very often this is a systems challenge, and there might be a barrier that's particularly pronounced within, you know, everyone's organizations that is prohibiting them from being better at global scaling. But often it's multiple barriers sort of working together, interacting with one another, and it really requires a system solution to overcome those.
Yeah, great. So let's start to break down some of these barriers.
Good. So starting with the illusion of local uniqueness, and I'll start here by restating something that I said a little bit earlier, which is that you know, regions very often have unique circumstances, and that does mean we do not want to create a one-size-fits-none innovation strategy and pipeline. You know, the entirety of the innovation pipeline that's right for North America might not be right for Asia. There are going to be differences. But actually, what we find is that when we facilitate discussions among regional leaders and help them really challenge their assumptions about how unique their circumstances and innovation priorities are relative to one another, they find that they actually have quite a lot of commonality and scope for collaboration and importing and exporting innovations, and certainly much more than they're necessarily realizing at that particular moment. So the way in which, or one way in which to overcome this barrier is for each region to define what we call its strategic focus areas for innovation. So those are sort of, the large, attractive, growing, profitable customer segments, problems, technology types that it wants to point its innovation resources at, consistent with its, local market conditions and circumstances. Now, if each region really clearly defines its innovation priorities, then they can look across them and actually compare and contrast where are their commonalities in our strategic focus areas. Once they do that, if an innovation has emerged in a strategic focus area that is shared across regions, then all regions with that strategic focus area can recognize that innovation as relevant to them, agnostic of where it was developed. And I'll give an example, again, using the story of the bank that we introduced earlier. If in the process of developing its strategic focus areas, that bank identified that, all of them had this priority around helping millennials bank on the go through mobile-only solutions, then the savings product that Europe had developed, the mobile-only savings product, would have been, identifiable as relevant to all of the other regions as well, not just Europe. Kristen, I don't know if you've got anything to add here.
Sure, a couple thoughts, Shari. I was just reflecting on a couple of comments I've heard in the last couple of years from a head of innovation, for example, said we have 1,000 things in our innovation portfolio and I'm not excited about any one of them, or a CEO who commented, it's like we have thousands of flowers blooming across our organization and, it's trying to find which one's going to grow the most. And I think this idea of the strategic focus area construct can help bring focus to innovation efforts and put guardrails around the ones that have the greatest potential for the organization. And it's also worth noting that this strategic focus area construct of customer, job, and solution really forces regions and the organization to think customer or consumer first and put the local jobs to be done at the center of the innovation strategy, which goes hand in hand to a big challenge that a lot of clients do come to us with as well, which is to become more consumer or customer centric. This can also be done centrally first, right? So identifying a customer job to be done in solution area and then determining what are the priority enterprise-wide strategic focus areas and how might these then need to be refined at the local level in execution, and in what order regionally should they be tackled as part of a long-term growth strategy and agenda, including where are those common areas of overlap across the regions. So this then also links to innovation language and typology, because what we see sometimes are the scaling issues come from the root cause of not having the right goals and bounds around these strategic focus areas. So for example, how big something needs to be or what a particular desired target customer are. And in particular for the more transformational innovation, those often need to be bigger or more at scale efforts to become the next new big growth platform for an organization. And so that's where this clarity, definition, and setting goals and bounds in this way can be really helpful for driving innovation at scale.
Well said. Good. Maybe we can advance onto the next solution. So misaligned incentives. How do we overcome that? And the question is really about how do you motivate regional leaders to invest, time and resource in exporting innovations for the benefit of other regions? And on the flip side, how do you incentivize regions to import ideas? So the way in which, or one way in which to think about this, is that regional executives can be motivated to export through their metrics and financial incentives. So if you think about the in-year cash bonus that regional leaders get, today that's tied exclusively to their P&L, their regional P&L performance. But you could tie that in part to the volume and the impact of innovations that they generate and export around the world have on a global basis. So you're not just recognizing regional leaders for growth that they originate and create within their own regions, but really growth that they originate and deliver on behalf of the global enterprise in regions outside of their own. And what we're trying to do is really create a win-win situation for importers and exporters. So one whereby the importing region is incentivized because you're importing something that is going to benefit your P&L, and your bonuses tied still largely to your P&L. And the exporting region is recognized for growth that they have enabled in regions other than their own. And there's of course various different ways of doing that, depending on how sort of metrics and compensation structures are set up. But really, the principle is about using incentives to create win-win situations. Now, that's only part of the equation. And Kristen, if I may, I'll hand it to you to say a word or two about culture.
Yeah, I love this linkage, Shari, and it's interesting in the context of the poll results, which put incentives as the biggest solution opportunity here. But in trying to drive change, our view is that incentives are important, but they're the most expensive solution you could deploy against some of these barriers. And as Paul Cobbin, who's the former Chief Transformation Officer of DBS Bank, and he is the co-author with our Innosight colleagues of Eat, Sleep, Innovate, he says so eloquently, nothing changes unless people's behavior changes. So innovation efforts and investment can only lead to scaling through day-to-day behavior. We've identified a lot of what this actually looks like in practice. For example, strategic experimentation, collaboration, curiosity, and this needs to be reinforced systematically by the organization. Back to you, Shari.
Great. So with that, I think we will move on to the solution to the final barrier, which is a lack of transparency. And just as a reminder of the issue here, very often within large global companies, you'll find that regions just don't have enough visibility into one another's innovation pipelines. And if you don't have that visibility, how can you import something that you don't know exists? Now, one of the solutions to this that we found to be remarkably effective is instituting a sort of really rigorous, centrally coordinated portfolio management system that each region can enter information about its innovation pipeline into throughout the stages of the innovation process, from initial idea generation, opportunity spotting, through to solution development, de-risking, and then finally launching it in the market. And then the idea is that having regions input data on their innovation projects into this central system, that creates visibility that lets other regions see there's opportunities to import things that we hadn't necessarily thought of. But sometimes there's actually opportunities to collaborate because regions are pursuing, initiatives really similar to those that we're also pursuing. And we'll be able to do things more effectively and efficiently by pooling our global resources and working together. So that is the final solution. We've got a few moments left here, and just before we get to the end of the session, we wanted to share a couple of examples of just two organizations that we think really embody and demonstrate the value that can be achieved through effective innovation global scaling. And of course, important to say that, organizational performance is driven by a great many factors. But for these two organizations, Lindt, the Swiss chocolatier, and Worth, the German tools company, global scaling has been a really, really important part of their growth stories over decades. So starting with Lindt, a huge amount of global scaling across its sort of, decentralized operations happened under the leadership of Ernst Tanner, who was the company's previous CEO, and he was CEO over a period of over 10 years. Today, he continues as the company's chairman. And the products that you see here, ranging from fruit sensations to the chocolate bunnies to Lindt, ultra dark chocolate truffles. These were developed across countries, including France, Germany, Switzerland. New business models were developed in Canada. And they were all identified and very systematically scaled to markets around the globe. And the impact of that really speaks for itself. Over a 25-year period, Lindt was able to realize double-digit, share price growth every single year, which very few organizations can sort of mirror. The second organization that I'll talk about is a little bit less well known, but it's a very fascinating company, the Worth Group. And it actually started off with a very, very humble story in the 1940s as just a single man selling screws. And today it's a 17 billion plus euro company that has developed a really, really diverse portfolio of businesses, industrial businesses, car parts, power tools, safety, inventory management, automotive and aerospace. And what they've done is they've, having originated and created those businesses in different regions, they've been really successful in scaling those globally by using some of the solutions that we've spoken to you all about today. And again, even over a longer time horizon, over 50 years, this is a private company, so there's no share price data, but over 50 years to be achieving revenue growth double-digit every single year, near universally, with the exception of 1 or 2 years over that 50-year time horizon. There's very few organizations that can say they've done that. And global scaling has really been empowering to them. So with that, Kristen, I don't know if you've got anything else to add, but I will hand it over to you to make any adds and start to bring us to a close here.
Absolutely. Yeah, I'll just mention that we, in 2021, we did some research in the consumer space in our consumer practice last year on public organizations that have outperformed their peers in the consumer staples sector. And this was done not just by driving growth in the core through momentum in their categories or geographic choices, but also by creating new growth engines or pursuing business model innovation. Companies we identified were Estee Lauder, Nestle, Ocado, Shiseido, Walmart, Woolworths, and Tata Consumer. Now, again, this is from a couple of years ago, but the idea here, and we looked at commonalities across these organizations, is there was a piece of it with repositioning their portfolio, which actually frees up the capacity to focus on building and scaling the new. But a big part of that was repositioning around the changing consumer customer jobs to be done, and the culture transformation that we talked about that has to go hand in hand with some of the solutions in these barriers. Shari was talking about portfolio management and governance, and with that, for example, we see the need to have high quality dialogue around the portfolio in the form of an innovation council or some sort of portfolio governance mechanism in an organization. It's not just about the mechanism itself, but it's about how that functions and what are the behaviors and dialogue that accompanies that. And that was actually a common theme that drove the transformation success in some of these organizations. So to bring us home and summarize our key messages from this discussion today, one, there's significant potential that companies can unlock by systematically scaling innovations across regions. And two, the reasons why companies often don't scale enough or do so only haphazardly. They're complex, they're manifold, and we shared 3 of the common barriers we see and some of their associated solutions, but this is, again, by no means exhaustive. We've written a lot about innovation performance based on the work that we do with clients across our industries. Please visit our website, Innosight.com, or reach out and speak with our team to learn more. So we hope that you found today thought-provoking. Thank you so much for your time, for the great engagement and the poll questions today. Really enjoyed this chat, Shari. Any other thoughts from you?
No, thank you so much to everyone for joining, and hope it's been helpful.